Welcome to Private Banking Advisory. A short update on the structure of interest rates and the rise that can be expected in the next 1 or 2 years. We all suffered from a period of extremely low interest rates. That means we suffered if we were investors or savers. At the same time, the borrowers had a field day and asset prices were pushed higher and higher with borrowed money. Now, how high can interest rates go in the present cycle? The cycle has definitely turned. Interest rates in the United States and now slowly but steadily also in Europe and in the UK are on the up. People claim that we cannot see a return to the high levels of previous years, 5 or 10%, because that would break the economic situation and lead to unsustainable bankruptcies, and not only for companies and private individuals, but even for whole governments. Is this really realistic? At the moment, I would say that the predictions are not credible, and it is to be expected that rates will reach levels that few analysts or economists are expecting at the moment. With inflation in the 5% level and higher, we need real interest rates that are also at the same level or higher in order to crush inflation. That means that present levels are not sufficient to do the job. How can you benefit from higher interest rates? Well, 3% or more on your US Treasuries, for example, and hopefully soon also for European and UK government bonds and corporate bonds, might be an attractive proposition. But as always, I warn you that you should look very closely at the cost of investing in these bonds and cash deposits. If your friendly investment advisor charges you 1% and then puts the money into bonds that charge again another 0.5%, you're probably quickly up to a cost level of 1.5%. That leaves only 1.5% from your 3% return on the bond portfolio. In addition, you have to pay tax, which probably cuts the return down another 25 to 50%. So, as always, I urge you to get in touch if you want advice on how to structure your investment account and make sure that you don't pay fees that are disproportionate to the return that you can achieve in the markets.